Good morning, traders. Manny Cabrera here, founder of MDC Trading Academy, with today's pre-market forecast for Friday, November the 5th. Let's quickly jump to our news items on our calendar for this day, Friday. We close the week with some more unemployment information and possibly a treasury currency report sometime today. Value activity happens before our opening bell, but it may have an effect on the market nonetheless, particularly the unemployment rate, as we're keeping an eye on the heat up of the labor shortage here in the United States. Let's jump quickly to our daily chart here, and this is more of the same, guys. I just wish I could announce something else. It's just more of the same. Market continues a slow churn to the upside on very relatively low volume, less than a million. It's a little bit over a million. We're averaging very small ranges, very tight movement, but nonetheless continuing to the upside. And the key here is buy the dips. Buy the dips, protect your stops, which takes a special skill. You need to understand technical analysis properly. You need to understand where the buyers are, where their sellers are, where the compressions are happening, where we're expecting the breakouts to happen. This is what we do here in MC Trading Academy. HR continues to move lower, as I mentioned. Also, the volume average seems to be just a little under, just a little over 1 minute. Let's look a little bit closer behind these numbers here at another time frame here, and as we can see, again, nothing much to report except that we're continually making new all-time highs. Every move above this is an all-time high. After market moving laterally for a bit, it's just continue on a tear to the upside. Now, tear is relative. Market's moving up, but you look at that daily chart, it looks like an exemplary move, and it's a not very efficient move because of the lower ranges. So the market tends to be chop around a little bit before it runs. But again, it's all based on your perspective of the market, the tools you use to analyze the market and be able to glean information to take advantage. Let's go to excuse me folks, sorry about that. Let's move closer to our analysis chart, which is a chart closer to our trading time frame. Where are we here this morning? A little rainy here in Florida this morning. There we go, and here we go. Intraday high of yesterday, intraday low. Here you see this is what I was referring to. It's kind of like it's a run to the upside, but look how tight these ranges are. Very tight. And then we get the long pauses of consolidations that are just whipsawing back and forth. Finally find some support, and then there's our run. Problem on the runs is that sometimes the retracement is not deep enough. And then of course we go back into the resistance, support. There's our consolidation, and bam, then it returns once again. Finds steam. Here's our short little consolidations here. It's not very tradable here. Here's the pop. So the market just continues to get into these compressions. There's the pop that I was referring to. There's another small consolidation. This is what I was referring to. It's not a very efficient, very clean sweep of higher highs and higher lows. It's look at this particular move here. There's the market attempting another record high, and yet the retracement, and then the pop, and then the retracement. This is what I'm referring to here. This is the kind of really weird movement that we're referring to. So just be careful. You're buying dips as long as we remain above this blue line here. This is essentially what we're doing, is buying dips. We do have another trend line here that we need to keep an eye on. So those are both our north and south lines right here, the intraday high and this potential trend line to the upside. Just be careful today. Have a great weekend, and we'll see you next week. Take care.